Hello traders, welcome to my YouTube channel. My name is Augustine O, King of FS. So today episode is part 2 of See What Others Don't. So I'm going to just be brief about it so that we can jump into the chat. So if you haven't watched the first video, I would like you to watch that video right now. Watch the video before watching this second video, because why? It will make you understand what we are really doing on this See What Others Don't, because you are going to be seeing the market the way I see the market, so that you can implement it in your own trading. And please, don't take my word for it. Do your back testing after watching this video. Back test, try a demo before going to your real account. So let's just dive into the chart so you can see how I see the market. So let's jump into it now. So this video, I said that I'm going to be brief about it. So before I jump into the chart, so I would like you to see this drawing as something that will help you. Like if you want to screenshot it, you have to screenshot it now. So first thing I look out for is for the market to maybe create a major inducement, then the market take out that major inducement, create another minor inducement. If I don't see this minor inducement, because that is my entry, that is where I will be entering the market for. If I don't see this minor inducement, I will not be taking any trade. If I just see the market is just straight, I will not be entering the market. So the market will create this minor inducement, then it will push all the way up, then push all the way down, then break structure to the upside. So why I said it broke structure to the upside, this structure will now be a major inducement. This is my major inducement. Let's say MJ inducement. So this is my major inducement. So for me to confirm that, okay, the market is not going to respect a breakout block, that the market is not going to respect a breakout block. But with this scenario, I believe that the market will respect a breakout block. Like from here, it will just hit my major inducement, and then the market will push all the way up. But for me to know that the market will not break this structure to the down, to the upside, I'll have to see this major inducement inside before the break of structure to the upside. Let's say before this break of structure happens, it must be inside of this, from this level to this, before the break of structure, the market must create that major inducement inside. So then I will not know that the market will respect this minor inducement. So you can get this clear, and this is going to be something that will help you, because when you are seeing all these things, it's going to give you that discipline to wait for the market. Because when you see this major inducement, you are going to wait, because why? You already know that, okay, the market already create a major inducement, so I want this major inducement to go and then tap into this minor inducement, then I'll buy from there. So you can see it's very simple. It's very simple. This is my strategy. And if I wanted to, okay, the last video that I posted, which is the part 1 of this video, if I wanted something like this, let's say I want to maybe buy from here. Let's clean this. Let me clean this. So if I wanted to maybe let's say I want to buy from this level, so I want this major inducement to be taken out, and secondly, I will use my Fibonacci retracement. So I will use my Fibonacci retracement from this low down to this high. So I can either enter the trade here if I see this major inducement inside this place. So I can enter the market there. But if I see the major inducement inside of this place, I will be using this 0.786 as my entry, or I will just use this major inducement as my entry. So the market will just come back all the way to this level and then push up to the upside. So here will now be my target. So I just need this trading range to be my target. I don't need maybe like the market will push all the way up. No, I just need this trading range to be my target. So let me clean this. I want to make this chart so clear, the way that you will understand. You can screenshot this right now, because here is a major inducement, and here you can call it minor. I call it minor inducement. Minor inducement. That's most places I like to trade from. And secondly, I must see a sweep from this level for me to confirm that, okay, this low we hold, and this low is a strong low, so that the market will not break it to the downside. So I will need to see that on this trade. And secondly, what I need you to understand is this: if you see that the market is bullish, or maybe the market is bearish, like in this scenario now, the market is bullish, and then you see the market pull back, taking this major inducement, and then pulling down to this, and then it creates another minor inducement. before breaking this structure to the upside. And then what the market did next was this major inducement. When you create this major inducement right now, then it took this major inducement out. Then create another small major inducement inside this trading range. Remember, here from this low to this high, to this high is a trading range. Is a trading range. Sometimes you will see that the market will just give you another major inducement to the upside and another major inducement to the upside, another major inducement to the upside. Then you confirm this. All this one will not be a minor inducement. This first one, this second one will not be a minor. This will not be your major inducement. The one that it prints last, the one that's maybe break structure to the upside, the one that prints last is your major inducement. So anything apart from this, all this one will be a minor inducement. So the market can just literally just do something like this. We'll just take out this major inducement, took out this minor inducement, the second minor inducement, and then it will just respect this other block, this breakout block at this point. Maybe a breakout block is here, or a support that will push the price up. So let's say a breakout block was here. The market will just respect this breakout block and then pull all the way up. So this is one thing that you need to understand. So for this now, I want you to understand this. Like if you don't understand this approach to this market, you are going to be missing a lot. Like a lot. You can see this already created another major inducement, which is on this low right here. Here is a major inducement. This low is a major inducement. So what the market will now do next, for you to know that okay, the market is coming back to this range, or maybe the market is coming back to this point of interest, what the market will do is for the market to break this major inducement, then create another little major inducement right here. When you create this major inducement, it will most likely just fake you out, maybe thinking this other block is going to take this thing to the up, but sometimes it works. Like most of the time it works, because this is another setup. But if I wanted to see that this won't want to work, I would like to see this breakup structure, major inducement being created, and then minor inducement being created. Then the market will just start pushing up. This is what I will see before I will buy. But for now, I am not seeing something like that. I'm just seeing a straight back to, let's delete this. I'm just seeing a straight back. Like let's say the market take out this major inducement now. Before it make that major inducement, it has a minor inducement, then the market take out this major inducement, and then create another major inducement right here, and then the market come back to this level right here. Then the market take that minor inducement out and then pull. Before it push down, you would like to create a major inducement, either with one candlestick covering the other candlestick and all those stuff. So you create another minor inducement and then create another major inducement. But most of this plays most of the time on gold. But when I'm trading in on maybe BTC USD, it doesn't always take this place out. But sometimes the market will most likely push to this level and take this place out. So my stop loss will still be here. So I will just use this as an example. So the market will always push down to this level and then come back to this entry. To this entry right here. So you can do many things right here before it gets to this down, but I would just like to take this first trade and then this second trade, and I'm good. So until the market gets to this place, you can maybe create this level like this, then push all the way up, using this place as engineer liquidity before the market will get to this place, and then before the market will push all the way up. So what I want you to know that, okay, this place right now, I'll be taking myself from here, and then this place, I'll be taking myself from here. So you can see how I'm able to analyze this, draw this trend line so that you can understand. This is almost about 10 minutes, but just I want you to understand this. So understand that this also is a breakup structure to the upside. So before the market to enter this point of interest right now, which is inside this zone, this trading range from this low to this high, from this low to this high, which is my trading range, I would like to sell from this high right now to set to this level before I can buy the second trade. So I can take 3 trades before I can buy. So I want you to understand this, because this is how my strategy works. So I'm going to take 1 to 2 trade on this BTC US on SAUSD, which is good. I'm going to take 2 trades so that you can see them and see how I was able to approach it. So on 4 hours, on daily time frame, you can see that this was a major inducement. The market take it out. major inducement, the market take it out, and then since then the market have been bearish. So the market gets to this breakout block on 4 hour time frame. Let's just go to 4 hour time frame so that you can understand it more better. So for me, I just like to maybe analyze the past for me to see the present. So that's how the market structures always likely work. So for me, you can see this right now. If you go to 15-minute time frame, you will see that this was a break of structure, but now I'm using this as a major inducement, or even using this as my major inducement. If I wanted to enter this trade, I will enter from this breakout block, because on a lower time frame is a nice breakout block. So I will enter from that breakout block. And if I want to enter second trade on maybe like 1 hour time frame, you can see that the market break this structure to the downside, and then create a major inducement at this level, create another major inducement, push all the way down, and then the market push back to this breakout block on a lower time frame. But I'm not taking all this trade. I just want you to use it to understand what I'm going to be doing next. So you can see this break of structure, which is the first break of structure. I'll call this the first, and then I'll call this the second. So after major inducement, first break of structure, second break of structure. So this third one, it most likely happen, and it most likely don't. The market can just decide to use this level or any of this level, because right now the market sweep at this liquidity. If you go to lower time frame, you will see it. So the market would like to use this level and then before pushing up. So I don't like taking this type of trade unless I know that okay, the market will push all the way up. But the market haven't given us a better break of structure, or on the left hand side. The only place that they gave us a break of market structure is when the market take us this week, this low right here. Then it broke structure to the upside. So the only place I will be looking for a buy is this level. So if I was selling from here, my take profit would most likely be here. If I want a lot of RR, maybe like 10 RR or 5 RR, so my take profit will most likely be here. You can see this right now. So if you think you still don't understand, you can see this break of structure at this place. I don't want to draw a lot on this chart, but I want you to understand it. I want you to understand this, because if you don't understand it, you are going to be missing a lot. So you can see this level right now. So this level, when the market gets to this place, breaking this structure, create this major engagement, market take out the major engagement, give us another major engagement, then market break it out, and then market push down to take out this level. When you take out this level, you just use this 15 minutes order block just to push the market up. So it even swept this low at this point. So this have already given me a confirmation that okay, the market would be most likely buy from this level, which was the major inducement on this level. This was a break of structure. Since then, the market haven't taken any major inducement. This was a major inducement. This was a major inducement. This was a major inducement. The market have not taken out that major inducement since then, until now that the market take out this major inducement. So if I want to be selling, if I want to be buying, I will be buying from this zone. So I will be buying from that zone. So you can see what the market did here. So if you go back to a 4 hour time frame, you are going to see that the market break. This is 4 hour time frame already. You're going to see that the market breaks structure like this, broke this structure to the upside, then swept this low. Just right now, you can see that the market swept this low. And then if I wanted to enter this trade, I will be entering the market right here. So I might even take stop loss right here, but that will be where I will be taking trade from. I will just enter here. Then my stop loss will just be below this level, and then I'll be targeting the previous high, which is something 4RR. So before then, I would like to just see the market more clearly before I enter the market. So I can even wait for this news to let this news hold first before I will enter this trade. So before then, I will just say, okay, I don't want to take this news trade. Let me just wait for the market to give me another break of structure before I can now buy or sell. Before I can now buy. So I would like this to be fast so that the market is very fragile, and it can literally give you the same setup on a lower time frame. Can literally give you the same setup on a lower time frame. And secondly, you can see this level right now. You can see this level right now. So I know that the market didn't break any structure. The only structure it broke was this. It was with weak, so I won't count that as a break of structure. But then you already understand that okay, the market is bullish. Anything that will make you say buy is what you will be looking for. So the market will just sweep this low. You can even take a trade from here. If you use your Fibonacci retracement tools from this level down to this high. So I think I will be taking trade from this level if I want to take trade. I'll be taking trade from this level. Then my take profit will just be here. So let's play it out and see what the market did. So the market put me in, and then it's quite moving take profit. But I'm quite curious about this. When the market breaks this structure to the upside, this structure, it create a major inducement. Which this was a major inducement, create a minor inducement, a major inducement right here, respecting this breakup block, and then the market put up down, which is the first break of structure. The reason I will hold this trade is this. Okay, the second one, it create a major inducement, respect this breakup block, and then the market break this structure to the downside. Now the market is creating another major inducement, but this major inducement will not count because why? It already completed two. This major inducement, first break and then second break. So if I'm looking for a buy, I will be looking for more buy than a sell. So if I want to take another trade now, I'll just take the trade from here. But my TP will just be right here. And then my stop loss will just be below this level and take profit at this high. So I might even take stop loss. It's very good to take stop loss, but to understand what you are doing. When you understand what you are doing and then you take stop loss, it's very good. Then you journal it down and then see where you will improve from. So you can see this trade play out fine. I know that the market didn't get to this late place, but before then, the market also do something here. You can see this break of structure to the upside. The market creates this major inducement and then took the major inducement out. So I will still be looking for buy on this level, on this place. So that will be my minor inducement. You get it? So there's no need for me to be buying from here, unless I will just leave this chart to just play out. I'll just leave the setup to play out. Either I take loss on this, then I make a profit on this. For me to enter this trade, it didn't trigger me, so I will not be joining the market. So this is how I see the market. It's quite very simple. It's going to be something like this. It's something like this. It's something like this. Sorry, it's something like this. A sweep. Let's say a sweep. Market creates major inducement at this level. Sorry, I think I didn't draw this way. So it's in an uptrend. So you are going to see something like this, a break to the upside before the market push all the way up. Okay, something like this. Okay, before the market push all the way up, it will give you a minor inducement before the market creates a major inducement. Then when the market take out this major inducement, we're looking for is a buy on the minor inducement to buy. So this is just how it will look like. So you can see this sweep, which will be a sweep right here. A sweep will be right here. Sweep of liquidity, a break of structure to the upside. Major inducement being created. Then look for a minor inducement to take the trade from. You can see that the news will spike you out sometimes. So if you are taking news trade, you'll be out before you see another setup because you already know where the market is going. That's just how the market works, like the way I understand it. So you will just mark your break of structure, your major. This was a major inducement. This was a major inducement. All this setup can actually make you say, okay, this was a major inducement that was created last. Let me zoom out. This also work in 15 minutes, this work in 5 minutes. So I think the next video, the first video I did was also in 4 hours, but the next video I will be doing is going to be strictly on 15 minutes and 30 minutes or even 1 hour, so that you can see it more clearly. Okay, you can see this level right now, create this major inducement, then the market push all the way up, creating this major inducement, market push up, creating this major inducement, then the market push all the way up, and then the market took the major inducement out. Then when the market took that major inducement, then it pulled back, this was the first push, and then the market creates another major inducement at this level. This was the second push to the downside. So after the second push, what am I looking for? I will be looking for a trade that will get to this level, which is this high. So any trade I'm going to be taking, I might even talk to say that, okay, this market is going to get here. It will, because why? That's the place I will be taking my take profit from. So I can say that the market will get there. It will get there. So all this retracement is going to for me to just join the market. These retracements are going to be for me to join the market. I might even take a little bit out before all this one play out. You can see this level. This was a major inducement. All this level was a liquidity. So I might take trade from here, or still wait for this my entry to trigger. So those two things. So the market still didn't trigger my entry. So this is how I will most likely just take the trade. And secondly, now you can see something is happening here. You can see this break of structure to the upside. This major inducement has been created. There's no minor inducement in this level. So I might as well just use this low as my entry just to buy to the upside. Then putting my stop loss right here. And then I take profits. Will be the same place I'm targeting, which is the so this is how I will take the trade throughout the week. So the market will pull down, I will look for a place to buy. The market will push down until it take out this high. So the market take out that high. Because yes, I know that the market is going to take out that high. So this is just how the market works. So if I don't take the trade like these three, like this one that I draw here, if I didn't take this setup, I might as well see another setup right here. So this setup actually validates everything for me, because why? The market have already swept this liquidity, this major inducement, which was this level. The market have already swept it. So, and I know that the news was this was news, so I won't count this as a break of structure. No, I won't count that as a break of structure. That was a clear news that most likely will take you out. And then now that I understand that, okay, first break of structure, second break of structure have happened, now I'm looking for a buy from here, a buy to the upside to this level, which will be a buy from here to this place. So I might as well start seeing something like this. Something like the market will push all the way down to this level, give me a break of structure to maybe a break of structure that will be in this level, and I will be entering for a buy. So anytime the market give me major inducement, then I will look for a buy until this level, this high is being taken out. So the market can just come back to this level, and before the market will push all the way up. So I will be looking for more buys, not to sell. I'm not going to be selling at that moment. If I want to sell, I'll know that, okay, the market is in 4 hours, so I want to sell. So if I wanted to sell, maybe I would have been selling this trade when the market is pulling down to this level. So I will be selling that one in 5 minutes or in 15 minutes. But in this one, I'm going to be buying. Everything I'm going to be doing is going to be buy. Is going to be buy. You can see how you can maybe say, okay, this will be a minor adjustment. The market didn't trigger you in, but it was closed. The market didn't trigger you, then it push up, give you a break of market structure, create a major adjustment. This was a major adjustment too, but you don't have any other major adjustment here, so you will have to use that as your minor adjustment. Then you take trade from there, put your stop loss right here, and the same thing happened, the same strategy, the same pattern. This was a sweep, this was a break, this was a major adjustment, another major adjustment that will now become your minor adjustment. Then you enter the trade from there. That's how it just works. And most of the time you just say, okay, the market have already swept this low, so the market will not sweep it again. It will come back and take it out, because why? There will be like a lot of people will be buying from here, putting their stop loss right here, because why? They will just say, okay, this is an order block, this is a breakout block, a break of structure to the upside, a major inducement, a minor inducement. This will now be a strong low for them. So you can make this kind of mistake, because I make the same mistake too. Sometimes I make the same mistake too. But if I see that the market have already taken this place out and this place is still intact, I will have to join the market again. This was the trade I took on gold, which is on a weekly trading recap. You can watch that video on my YouTube channel. So which was the trade I took on gold. So I will just take this trade again, because I know that the market will most likely take me out. Sometimes it won't. So I will just still target the same level, because why? I already know that the market will take out this high. So that's how this market works. So if you haven't screenshot this, just screenshot it. Try to backtest this. Trust me, it will help you a whole lot to view the market in the right way. Try to screenshot this, backtest it before trying it. So see you in the next video.